Hello and welcome to Inderes TV. Today I'm in the studio with Rauli Juva to discuss Lindex that released their Q4 report last Friday. Hi Rauli.
Hello Pia.
So let's start with the traditional. What were the tops and flops in the Q4 report?
Yeah, the Q4 was a quite solid report. We were actually expecting a profit warning regarding the full year guidance up until January, and the guidance was 70 to 80 million in full year EBIT, and they actually landed at 75. So that was clearly above our expectation for the Q4. So the results were quite strong, both driven by good gross margin and cost control. The sales were pretty much in line with our expectations. So quite good figures actually. On the negative side, I wouldn't say that anything was actually negative against expectations. Obviously, that the Stockmann department store division is still making losses, so overall that's a negative. But as such, a pretty solid report.
Yeah, so in line with expectations, and certain parts were better than expected. So they also announced last week that they would close one Stockmann department store in Finland or in Helsinki. Is this part of the strategic review, in your opinion, or is it something else?
No, that's an operative decision. Strategic review is regarding the whole future of the division, that whether it's divested from the group or not, or something else. But this is an operative decision which we have been actually expecting. They did have the floor space in Itis already 2 years ago, and since then we have seen it likely that they would exit from that location when the lease expires, which it will do now in the latter part of the year.
So it was a natural point in the timeline. Would you see that we could expect other moves like this before the strategic review is finalized, or?
Well, if they will come out during H1, like they now said for the strategic review, which was postponed from the end of last year, no, I wouldn't expect it in that time frame. There would be more closures, but over the coming years, whoever wants the department stores going forward, I would see it possible or even likely that one or two more stores would be closed.
Okay. So there is one remaining dispute still, and it seems to be dragging on. It doesn't seem to be coming to an end soon. What are your expectations concerning this?
Yeah, there was some decisions from the lower court before year end on that one, and the parties appealed, and now unfortunately for the company, it seems that will drag on, and we don't really have any visibility what's happening there. We believe that the company would like to settle that basically as soon as possible, but it might be also that the supervisor of the restructuring program has some other views and is kind of holding back that. So let's see. We had been originally hoping that the company would settle it fairly soon. But now I have to say that it looks more uncertain, and if they run through the whole kind of court process, it will most likely take until 26 to have a resolution.
Right. You also mentioned in the report that possibly, depending of course how long this dispute takes, that this might be something that weighs in the strategic review, how long that will take.
Yeah, those are not linked directly, but we have said, and it seems clear that it would be, if they would like to sell the department stores, it would be simpler and easier to do that once the restructuring process would be over, because there are certain regulations you have to follow. You would have to basically approve it with the supervisor and maybe even the debtors. So it would be at least take a bit more time and bureaucracy to make the divestment during the restructuring. But it's not impossible to do it, even if the company would continue to be in the restructuring.
Okay. This year, what's the outlook like for this year?
Well, the company guides for 0 to 4% growth and 70 to 90 million EBIT. So very much in the same ballpark they have been now. Post-COVID, they have been doing 22 and 23. They did 80, and now last year 75 million, and the midpoint is now 80. So it's very much around the same levels, which is quite expected. And this year they will ramp up the new warehouse for the Lindex division in Sweden, which will then create savings and also enable more growth opportunities starting from 26. So maybe for the Lindex division, at least from 26 onwards, we can see a bit higher growth and some earnings improvement as well. But this year still around the same levels than the previous years.
Yeah, and your own forecasts are in that same.
We were in the lower part of the range, and now we're a bit hiked, so we are quite close to the middle of the range now.
Okay, and then finally the valuation and recommendation. What are we setting at now?
Yeah, we continue with the buy recommendation there. The valuation is such, of course, if you compare it with the current earnings when the department stores are making losses, it's not that interesting. The valuation is more on the high side if you look at like the earnings multiples for the current earnings, but the investment thesis we have continues to build on the fact that they would divest or give out or whatever, get rid of the department stores fairly soon, kind of following the strategic review, and that would unlock the value that the group has in the Lindex division, basically. So that's very much the idea still, and let's see what happens there during the year.
Okay, thank you very much, Rauli.
Thanks.
And you can read the report at Inderes.se.